frame up the reasons, but in the end, nobody was telling me, if somebody told me 10 years ago what was going to happen the next 10 years, we could have made a lot of money in the bond market together, but there's always a reason afterwards. Tomorrow's paper will say stocks went down today because of, but they didn't write it this morning's paper that stocks are going to go down today. You have to know what you don't know, and you have to make sure that what you don't know isn't all important. I mean, if there's 4 boxes there, you want to get to what is knowable and which is favorable. And there's things that you'll miss out on because they belong in the other 3 boxes, one of which will be favorable, another one that's favorable.
What if we told you that banks are hiding so many secrets from us about money and they clearly don't want you to know that? So in this video, we'll be sharing with you 8 secrets about money that the banks don't want you to know. The general public might have so many misconceptions about money and banking, and it's largely based on what they hear from the media and their own personal experiences. For instance, many people learn the hard way on how checks they deposit are held for 3 days before the money is actually available for use. But again, this is going to be very different in different countries, and it's not going to be the same in your country. So here are other secrets your bank doesn't want you to know. Number 8. Foreign ATMs are complicated. Using an ATM might not be as easy in a foreign country like how you'd be able to use it back home. There are several stories of tourists where they were not able to withdraw cash because of so many issues with ATMs. The ATM machines in foreign countries offer only limited services because back home, you could use your ATM to change your PIN, see your account information, transfer money and more. But abroad, you can just use it to know your balance, and sometimes you can withdraw your cash as well, if you're lucky. On top of that, there are several cases of ATM-related robbery in foreign countries, especially if you visit a country that is not so famous for being safe. Oh, did we forget to mention that foreign ATMs usually charge higher withdrawal fees than what you pay back at home? Again, all of these laws are different for different countries. But again, you need to keep these in mind and also make sure to avoid private ATMs because it can be a security risk, or it will end up as a mistake that you will never want to forget. Number 7. Banks make mistakes. One fine day, you wake up and you find a huge amount credited into your account. But that's not the money that you were waiting for. No, it's not a lottery that you didn't buy. It's just a mistake by the bank because just like every other organization, banks can make mistakes too. In that case, your best way to deal with it is to not use that money. Instead, make sure you inform the bank about the transaction because eventually the bank will come back to the customer and they will reserve the transaction and will also generate a police report after proper research. If you use that money, it can create a lot of issues, not for the bank, but for you as a customer of the bank. Number 6. Online banking flaws. We're moving towards everything digital, which means that our banking system should also embrace digital means because it'll make our lives more convenient. Today, so many of us use online digital wallets like Apple Pay or Google Pay to do transactions, which makes life so much easier. So online banking would be the evolution of the traditional banking systems that we're all used to. But technology is so advanced and convenient that it's easy to forget that the computers and people that make online banking happen are not perfect, and we often think our banking system is so good that it cannot make any mistakes. As more people are embracing this digital future of banking, online banking has become an increasingly attractive target for hackers, and major banks have always been the prime targets of hacking attacks. You may fall victim to something known as phishing. This generally involves tricking somebody into clicking a link in an email message, and then the link will download a software to the computer which will be used to gather sensitive information like your passwords and usernames. This might look very legitimate to you, and you might enter your confidential information, which will then be used by hackers to gain access to other accounts like your email along with your bank account. Number 5. You can negotiate with the bank. What if we told you that you don't have to pay the interest rate that your bank is asking you to pay? Instead, you could negotiate with them for a lower interest rate depending on your credit score and also your relationship with the bank. It is a well-known fact that lenders prefer customers with a good credit history, and banks also roll out preferential rates for existing customers or those who have a good credit history. So if you're a responsible borrower and you have made all the repayments on time, there are high chances that you will have the ability to negotiate with the bank for a better interest rate. If this is not the case, you can negotiate with the concerned lender provided that you have a good business relationship with the lender. Banks also offer lower interest rates during the festive season. However, larger banks are generally stricter when it comes to their lending practices. So if you apply for a loan from a larger bank and it's approved, then the terms of that approval are final and you cannot ask for a larger loan or a lower interest rate. Number 4. Cross default. What if we told you that if you delay your payments, it might affect your other loans as well? Well, that's exactly what cross default is all about. Cross default happens to be a provision in the loan agreement that puts a borrower in default if the borrower defaults on another obligation. To put things into perspective, a cross default clause in an agreement may state that a person automatically defaults on his car loan if he defaults on his mortgage. Cross default provision is for protecting the interests of lenders who desire to have equal rights on the borrower's assets in case of default in one of the loan contracts. Cross-default provisions are included by lenders to encourage repayment, but the problem is it will lead to a negative domino effect. This means that if you're missing a car payment, it would create a negative domino effect and would allow the same bank to charge you higher interest on your mortgage or student loan. So your best bet is to avoid opening a bank credit card that has got this clause in this agreement, and this is something that you need to be extremely careful of, or else you will end up in a negative domino effect that we mentioned earlier. Number 3. Promotional credit card. You might be receiving calls from your bank asking you to get a new promotional credit card, and they typically want you to spend a certain amount of money within a set time frame. It might look like a great deal to you, but the bank is actually doing it for their own benefit because the more you will be swiping your card, the quicker the bank makes their money back from the fees that they collect from the merchants. And you should also know that there are so many credit card holders who overspent and they are not able to pay back the money, and this way the banks will also be able to generate revenue from the interest that you'll be paying if you don't pay your credit card bills on time. Number 2. Merchant fees. You might be using a credit card so that you don't have to carry a lot of money with you all the time, and also to improve your credit score. It may be very convenient for you, but for a business owner, the story might be different. If you're a business owner who accepts credit card payments for your business, you will quickly realize that there are merchant providers out there and they all have different credit card processing fees that are much more complicated to understand compared to other overhead expenses. This is because the pricing models that determine credit card merchant fees are different for different merchant service providers, and it can also include hidden costs which will end up being a huge headache for the business owners. Number 1. Don't leave everything to the bank. Banks will always work in their favor, which is why you as a borrower need to do the majority of the work to get the best deal possible, because if you leave all the work to the bank, they will likely make you pay higher fees and rates, which is not the best thing to do if you want the best deal possible. Also, you should not be putting all your money into the savings account, because if you want to make more money, you need to invest that money into assets that will generate more money, and this will be the best way to beat inflation, because the money in your savings account might not have the same value that it is having today because of the inflation. In the end, saving money and putting personal financial tips into practice can be quite challenging. So keeping too much money in your savings accounts can actually hurt your long-term financial goals, so keep that in mind. And that's a wrap for today's video. What are the other secrets about money that you know and we don't? Do share with us in the comment section below, because we like